Okay, so we have learned the relationship of partners with each other. And we know that partnership is the common business of all the partners. So the partners are free to decide the role amongst each other. Like in the example we saw that Mr. B was not allowed to purchase or sell because Mr. B was weak in bargaining. Moreover, we saw that when the partners did not decide the roles amongst each other, they were governed by the rights and duties as per section 9 to 17 of the Indian Partnership Act. Well, now it's time to study the relationship of partners with the third parties. So, to understand this better, let's take an example. A, B and C started a partnership shop and their partnership shop was called as Best Furnitures. Mr. A was an architect. So, he would meet the clients, show them the different designs, and once client finalized the design, he would show this design to Mr. B. Mr. B was a carpenter and he was responsible for taking all the measurements and then purchasing the raw material and building the furniture and finally installing the furniture at the client's home. Mr. C was more of an accounting person. He used to make all the payments for the raw material, collect the receipts from the clients and maintain the accounting books. And we know that every partner is an agent of the firm and can bind the firm into a contract with third parties, provided he is doing everything possible within his authorities and in the name of the firm. Now the interesting part is, how do we decide what is within the authority of a partner? Well, one way is that the partners can express their authorities in an agreement between them. Meaning, A, B and C here can decide that, hey, as A is an architect and more knowledgeable about the designs trending currently, only he should talk to the clients and help them select the designs. B and C should not communicate much with the client while the client is selecting the designs, right? So here, A has been expressly authorized to talk to clients and help them to select the designs. Mr. A can bind the firm for design, but B and C cannot bind the firm on designing matter. But imagine if the partners had to expressly discuss and pen up every partner's rights and duties against the third parties. It would be too lengthy and complicated a process. So there has to be a second way. And the second way is where partners do not express their authorities in an agreement between themselves, but keep everything on an understanding between them. Something like an implied authority. Meaning, as Mr. A is an architect, and usually architects have more knowledge than accountants and carpenters in the terms of current market trends, obviously Mr. A should do the talking to the client part. Similarly, as Mr. C is an accountant and has more knowledge in bookkeeping than Mr. A or Mr. B, and so obviously he should record all the transactions in the books, not Mr. A and B. So you see, some division of work between the partners need not be expressed. It is obvious. And this obvious categories of work is called implied authorities of the partner. So partners can not only bind the firm relating to express authorities, but also their implied authorities. But a partner will only bind the firm through his implied authority in the following two conditions. 1. The act done by the partner must relate to the normal or usual business of the firm. Like here, Mr. B was the carpenter and so he had the implied authority to buy the raw materials. So when Mr. B is dealing with the trader of woods, he has the power to bind his firm into a contract with the firm of the trader, as that act of purchasing wood would be considered to be normal business of the firm. And the firm Best Furnitures would be liable to honor all the points of the contract. Like if in the contract it's written that payments for the woods purchased has to be made in 7 days, it would have to be done in 7 days, even though the industry standards may be 30 days. But instead of the wood, if Mr. B purchased alcohol on credit in the name of the firm, his firm would not be bound, as purchasing alcohol is not the normal or usual business of Best Furnitures. So, a partner can only bind the firm out of his implied authority if the contract he is doing with the third party is in the normal or usual course of the business. So what's the second point? The second point is the act must be done in the name of the firm. Meaning Mr. B is dealing with the trader of the wood. He must let him know that he is purchasing that wood on behalf of Best Furnitures, not on his personal needs. So unless a partner is dealing into usual normal business or dealing in the name of the firm, there is no implied authority of the partner to bind the firm. There are certain other examples also where the firm cannot be bound through implied authority. They are: no partner has an implied authority to submit a dispute relating to the business of the firm to an arbitrator. Now, who's an arbitrator? I'll solve this question for you. So, supposing A and B are entering into a contract and they decide that, hey, if someone of us messes up, if A doesn't do his work or if B doesn't do his work, we will not go to court. We will go to Mr. C. Mr. C is a person who Mr. A and B both know and both have respect for Mr. C. And they say, okay, let's not go to the court and waste each other's money. In case of any problem, we'll go to Mr. C and ask him that, hey, according to you, who did the right thing? So, no partner has an implied authority to submit a dispute relating to the business of the firm to an arbitrator. There can be no implied authority as such. The only way a partner can do this if he has the express authority to do this, not an implied authority. Well, the second is that no partner has an implied authority to open a bank account on behalf of the firm in his own name. So what is to be focused here is in his own name. A partner can go to the bank and open a bank account on the name of the firm. That is not a problem. But he cannot open a bank account of the firm in his own personal name. Third is that no partner has an implied authority to withdraw any claim by the firm against third parties. So, continuing with our example, let's understand ABC were three partners, right? And they had to take 5 lakh rupees from Mr. D against a previous sale. Now, Mr. D is also the son-in-law of Mr. C. And Mr. C thought, without asking to Mr. A and B, what Mr. C did was he said to Mr. D that don't pay us the 5 lakh rupees, it's okay. I forgo your claim, don't pay it. Is this possible? No. No partner has an implied authority to withdraw any claim by the firm against third parties. Similarly, no party has an implied authority to also withdraw any suit or proceedings filed on behalf of the firm against a third party. No partner has an implied authority to admit any liability in a suit against a firm. Right? No partner can admit a liability. No partner can say, yes, we did it. Right? In a suit against the firm, unless discussing it with the other partners and then give a unanimous answer that yes, we did it. Right? No partner has an implied authority. No partner has an implied authority to acquire or transfer any immovable property belonging to the firm. No partner is authorized on his own to buy an immovable property or to transfer an immovable property belonging to the firm. It has to be coming from an express authority, not an implied one. And no partner has an implied authority to enter into a partnership on behalf of the firm. Now, let's study few questions about implied authority and finish the topic. So the first question, can we extend or restrict a partner's obvious authorities? The meaning, can we extend or restrict a partner's implied authorities? Yes, we can. Partners can internally decide and either expand or restrict any partner's implied authority. Continuing in our example, let's say Mr. A, B and C decide that they should restrict the implied authority of Mr. B to purchase raw materials and decide to extend Mr. A's implied authority by permitting him to purchase raw materials. So now Mr. B will not purchase raw materials. Who will purchase raw materials? Mr. A should purchase raw materials. Now, if still Mr. B goes to a trader of wood and contracts for purchasing of 200 kgs of wood with a payment terms of 7 days on behalf of Best Furnitures, would Best Furnitures be bound by the act of the partner B? Well, the answer depends on one crucial factor. That did the trader know about the restriction of implied authority of Mr. B? If yes, the trader did knew that as per the new implied authorities between the partners, Mr. B is not allowed to purchase wood, then Best Furnitures would not be liable. But if the trader did not have any information of such kind that from now on Mr. B cannot buy raw materials, then Best Furniture would be liable for the deal and would have to buy 200 kgs and pay on the 7th day. The second question, what is the effect of admission of a partner? Now, first of all, I want you to know that admission here does not mean a new partner. It means representation of a fact by a partner to third party. Well, if the representation of fact is within his normal course of the business, then the firm would be liable. But if the representation of the fact is outside his normal course of the business, then the firm will not be bound. Continuing in our example, let's say our client asked Mr. A whether a specific design of a chair would be sturdy and long lasting. Clearly, whatever Mr. A says would make the firm bound, as this subject is the matter of his usual business. So if Mr. A said yes, the design is sturdy and long lasting, and if it turns out to be opposite, the firm would be liable to pay the damages to the client, as Mr. A had the binding power for such matters. But if the same question was asked to Mr. C, his reply or his representation or his admission would have not mattered, as it was out of his normal business, and hence whatever his admission would be, the firm would not be held liable. So, for all the matters of normal business of a partner, partner can bind the firm by his representation and not otherwise. Let's look at the third question. What is the effect of a notice received by an active partner? See, notice to an active partner for the act done by him in the ordinary and usual course of the business would be equal to notice to the firm itself, unless the notice was due to any kind of fraud committed by the partner. In such a case, the notice would be on the partner himself. So if Mr. A said that yes, the design is sturdy and would long last, but actually it did not, and the client served a notice to Mr. A for damages, Mr. A would not be liable for damages. Rather, the whole firm, Best Furnitures, would be liable for damages, as notice to an active partner is equal to notice to the firm. But if Mr. A wanted to fraud the client, and that's why he said, yes, the design will long last, but actually it did not, then the notice to the active partner is not equal to the notice of the firm, as only Mr. A would have to pay the damages, not the firm. The fourth question: would the firm be liable for any wrongful act of the partner? Yes, we already studied if the partner has done everything within his right, he binds the firm. And in such a case, even if the work done by him turns out to be wrongful, the firm is liable, not him individually. The fifth question: would the firm be liable for any misapplication of funds by the partner? Yes, Mr. C was to collect all the proceeds from Best Furniture's clients and had to give to their creditors. Mr. C used the funds for his personal needs, and not only him, but the whole firm would be liable, as what he did, collection of funds from customer and paying to the creditors, was within his normal business, right? Hence the firm would be liable, as Mr. C was clearly the person from the firm to do the work.